Guys, welcome to another video. So in this video we are going to discuss about the JP Morgan financial model. In the previous video we discussed about the different aspects in the financial model. So that's a balance sheet, capital, loan and LLR ratio. In this video we are going to discuss about the interest calculation. So for the investment bank there are the different source of the revenue, like the deposit with the bank, federal fund sources, security borrowed, trading assets or debt, securities, loans, and other IE assets. So there's a deposit in the bank. So there's a multiple type of the deposit that invest into a bank for the multiple purpose. Then there's a federal bank sold as well. So these are the federal bank funds, and these are available in the market for the selling purpose. So that can be sold in the open market as well. That's where the security borrowed, like the company borrowed the security or the investment bank borrow the security for the different purposes. So this is the security borrowed. Then we have the trading assets. Then there's a liability as well. It's a interest bearing deposits, federal fund purchase, and the commercial papers are there. Then the other borrowings and liability, beneficiary interest and long term debt. So let me introduce there there's a 2005 and it will go around the 2018. So this is the deposit with bank. These are the federal funds sold and the security borrowed. Then these are trading assets and securities, and these are the loans. So these are the loans for the particular reason. Then we discuss about that different parameters for the different number. Let's say we have the historical area 2005 to 2013. Then we have the projected area one is a 2014 to 18. Then we have the another area. It's a 2008 to 2013, and then we have the 2018 also there. Then we have the liabilities as well. It's interest bearing deposits, for federal fund purchase, and the commercial papers are there. Then the other borrowings and liability and the beneficiary interest. So it is around, let's say, 383 by 259, and it's a 1015 by 382 by the 2018. So this is the one number. Then we have the another number for the commercial papers as well, is a 13863 and 72059 for the another commercial paper. Then we have the beneficiary interest 42197 and 49617. So this one is also number. Then we have the total interest bearing for the different liabilities. This is a debt by trading assets. So it's a C10 by balance sheet. Then we have the IE, or the another other IE assets by the total other assets. So it is the percentage of the total other assets. Then we have the IB deposits by the percentage of deposit, whatever is there. So this is linked with the from the balance sheet from the total assets. Then we have the liabilities and the other borrowings, like what are the liabilities for the different fund and what are the other borrowings on the different parameters that are working for the different reasons. Then we have the interest, average interest on IE. So it's a 6%, 5% to 6% is the general interest rate. Then we go around like 6% to 2.6% for the over number of the years. Like this will be there. Then we have the average interest on BIBL. So this one is 3.2%, 2.6% is also there. Then we have the interest rate spread. It's a 1.9% to 2% is also there. Then we have the interest income. So this one is the interest income, and this is based on the calculation of the different interest numbers. So it's average interest rate on the borrowing. So this is the average interest income on the different parameters on the basis of different things. Then we have the interest expenses are there. It's a L5 and it's a L38. Then it's a 2.15 is also there. Then it's a 62% and it's a 73% is also there. So this one is the number of calculations for the number, and the different parameters are there. So this is one for the investment banking financial model. Let's meet in the next video for the final valuation number.